Hello and welcome to another update video about DOT. Yeah, not much happening today on the DOT chart, but we have seen a bit of a reaction to the lower boundary line of this sideways range. So far, DOT is still holding that sideways range, and we haven't seen a breakdown or anything. So DOT is definitely still holding that, and we haven't seen a break above below that. What do we say? $6.05 level, right? That's the key level that eventually needs to be broken to, well, form one more low in this move down, which I'm labeling as a C wave of wave Y of wave Z in this wave 2 correction. Surely, something different could be playing out. That move down is not impulsive. It's not impulsive, so we'll give the overall the bull still the benefit of the doubt. But the whole structure would look better in this wave 2 if we get one more low as per the white microstructure. And that one more low should send the price into the region between $5.50, I'd say, or at least $5.66, which is the 61.8 retracement, and $4.99, which is the 61.8 extension of the Y wave to the downside. So we have additional or different levels of different ways of measuring targets and defining targets here. This is now obviously really a fine-grained microstructure analysis. It's not that reliable because these microstructures, they tend to change, especially when they are really corrective. But so far, it's not changing, and it's been following the wave count now for a little while. The idea is that the wave 1 obviously topped here in March, 14th of March. That was the first 5-wave move up after the bear market low. And this is a super extended correction. I mean, we still cannot confirm that a low is in place. So we still have to focus on the downside, right? We can watch for potentials of trend reversals if they show, but at the moment there's nothing here suggesting that we've bottomed. Okay, we are close to a low, but there is not really a setup. So we have a range here. So range traders might choose to add a little bit here, but please be aware all the reactions have been corrective. All the reactions to that support level have been really corrective, which means just in 3-wave rallies. So what we've seen is in the move down, so my interpretation of this decline is that this is a WXYXZ structure, very rare correction. I normally wouldn't count it that way, but it's the best way to do it here. Assuming this is a wave 2, maybe it's something more bearish, which is not clear at this stage if it is. Okay, it would require a break below $4.60, below the support area, to really suggest that something more bearish is going on. We see here a range, or let's say, sideways range, and then this descending trend line. So the market has, given us 3 to 4 touch points here, and therefore I remain short-term bearish against that trend line. It requires, for further confirmation that we're really going down, a break below the green line, the lower boundary line of the, you could say, trend channel or range. And then it should take the price to 566, 550, 499. There's a microstructure here, which is completely unreliable. But if we say, okay, we are in the Z wave, this is a WXY structure itself, and the Y wave is an A, B, C, and we're now in the C wave. There are so many ways of counting this. I wouldn't rely on the microstructure here. For example, we can say maybe even the B wave is still unfolding. Or maybe the wave W is down here and the X wave is still unfolding. So there are plenty of ways still how this could morph. Different ways, because it's all corrective. So I don't have an edge here looking at the microstructure. But zooming out, we can still see we have a possible 5-wave move up, a corrective pullback. And as long as the $4.60 level is holding, the idea of a third wave that could unfold into the, let's say, $23 region or higher, that's a plausible scenario. But I need some kind of a setup on the smaller time frame to really indicate that this is what's playing out, because this correction is definitely very protracted, very extended, and I would at least want to see, let's say, a break above the descending trend line here as a first indication that something more bullish is indeed playing out, something more directly bullish. Because at the moment it would look best if the price could form one more low, because this here is not impulsive at all. What happened here, from the April lows. So this looks like part of a correction, and then one more low means we could start, from scratch basically, with an impulsive uptrend. So yeah, but against 460, I'm still overall upholding an, let's say, a bullish perspective. But in the short term, I'm very much on the side of caution until I get like a first setup. That's my update about DOT. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Also make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.